to the India Business Insights. We are back with the latest edition of our update on the Indian economy series. Stay tuned, watch till the end, and please leave your thoughts down in the comments section. So let's begin. Ban on rice exports. As the economic highlight of this month, on 20th July, India announced a ban on exports of non-basmati white rice. The move can be interpreted as an attempt to curb the rising domestic food price inflation. The decision has raised concerns around the world as India is the world's largest rice exporter, accounting for 40% of global rice exports. There exist numerous types of rice cultivated and enjoyed worldwide, but there are four primary categories that have significant global trade. The majority of global trade consists of the elongated, slender indica rice grains, while the remaining portion is divided among aromatic varieties such as basmati, the shorter grain japonica, and the sticky glutinous rice. India has banned the exports of indica rice grains. Developing countries such as China, the Philippines, and Nigeria are among the top importers of indica rice. The rice is part of the staple diet in these nations. Thus, India's export ban has raised fears of significant inflation in global food prices. These concerns are even more alarming in light of the recent fallout of the Russia-Ukrainian grain deal. On the other hand, such proactive measures may help in putting some checks on domestic inflation. Monetary policy. In June 2023, India witnessed a rise in retail inflation as measured by the Consumer Price Index, reaching a 3-month peak of 4.81%. This figure marked an increase from May's rate of 4.25%, according to the latest data released by the Ministry of Statistics and Program Implementation. Simultaneously, inflation data for the Wholesale Price Index, which gauges overall goods prices before their sale at retail levels, also climbed to 4.12% in June 2023, up from May's 3.48%. Inflation has been a recurring theme in the reviews conducted by the RBI Monetary Policy Committee. The RBI has projected a 5.2% inflation rate for FY24 and remains optimistic that CPI inflation will moderate during the fiscal period. The future inflation trajectory is likely to be influenced by the prices of domestic commodities such as vegetables, cereals, spices, and other essential goods. A combination of uneven monsoons and subsequent poor agriculture yields, high fuel prices, and an increase in demand due to growing GDP might have led to a rise in inflation. However, the government and RBI are taking active measures such as the aforementioned. GST. In July, India's goods and services tax revenue reached an impressive Rs 1.65 lakh crore, showing an encouraging 11% increase compared to the previous year. This marked the fifth instant where GST collections surpassed the Rs 1.60 lakh crore milestone. The breakdown of the total collections is as follows. Central GST contributed Rs 29,773 crore. State GST accounted for Rs 37,623 crore and integrated GST stood at Rs 85,930 crore, which also includes Rs 41,239 crore collected from the import duties. The continued surge in GST collection is a reflection of rising consumer demand coupled with a more robust compliance framework and use of technology to detect and desist evasion. FPI, Foreign Portfolio Investment. As per the data from NSDL, foreign portfolio investors have shown consistent interest in Indian equities, with investments exceeding $5 billion for 3 consecutive months, a notable achievement. On average, FPIs invested $5.5 billion in each of the 3 months leading up to July 2023, resulting in a total inflow of $16.7 billion over the 3-month period, which marked the highest influx in 31 months. In the month of July, FPIs made a significant investment of $5.7 billion in India, indicating a noteworthy gross buy-to-sell ratio of 1.23, outperforming the long-term average of 1.07. This marks the fifth consecutive month where FPIs have been net buyers of Indian equities, contributing to a total inflow of $19.1 billion. In dollar terms, India stands as the second best performing market among major economics, trailing only behind Brazil since the reversal of FPI flows from the beginning of March 2023. Purchasing Managers Index. The Manufacturing Purchasing Managers Index, compiled by S&P Global, slightly declined to 57.7 in July as compared to 57.8 in June. Nevertheless, this marks a continuous expansion for over 2 years, as the index has remained above the crucial 50 mark, which separates growth from contraction. Although new orders maintained their strength, the pace of output growth eased to a 3-month low. In July, the rate of input cost inflation picked up, reaching a 9-month high, although it still remained below the series average. Notably, there has been a consistent monthly increase in output since July 2021. The most recent rise was substantial, albeit being the softest in the past 3 months, as indicated by the survey's results. Index of Industrial Production. The Ministry of Statistics and Program Implementation reported that the Index of Industrial Production in India experienced a growth of 5.2% in May 2023, up from the 4.2% recorded in April 2023. Last year, in May 2022, the factory output measured by the Index of Industrial Production reached an all-time high with a growth rate of 19.6%. Data from the National Statistical Office revealed that the manufacturing sector, which contributes to more than 3/4 of the IIP, witnessed a growth of 5.7% in May, a rise from the 4.9% recorded in April 2023. In the power generation sector, which had seen a decline of 1.1% in April, there was a marginal improvement with a growth of 0.9% year-on-year in May 2023. Mining output also saw an increase, rising from 5.1% in April to 6.4% in May. The use-based classification of the indices for May 2023 stands at 149.8 for primary goods, 102.7 for capital goods, 154.1 for intermediate goods, and 174.7 for infrastructure constructional goods. Additionally, the indices for consumer durables and consumer non-durables stand at 115.2 and 148.0 respectively for the same month. May 2023 witnessed remarkable growth in India's core sector output, which accounts for over 40% of the IIP. The core sectors, which include coal, crude oil, natural gas, refinery products, fertilizers, steel, cement, and electricity, experienced a significant surge of 18.1% compared to the same period in the previous year. Forex reserves. India's foreign exchange reserves experienced a decline of $3.2 billion to reach $603.87 billion in the week ending of July 28, according to the latest data released by the Reserve Bank of India. This followed a previous decrease of $1.9 billion, bringing the reserves to $607.03 billion for the week ending on July 21. The weekly statistical supplement by the Reserve Bank of India indicates that foreign currency assets witnessed a drop of $2.4 billion, settling at $535.33 billion. The FCAs include the impact of currency fluctuations of non-US units like the euro, pound, and yen, held in the foreign exchange reserves, which expressed a dollar in dollar terms. It is worth noting that India's forex reserve reached all-time high of USD 645 billion in October 2021. However, the reserve have been experiencing a decline at the central bank utilizes them to safeguard the rupee amid pressures caused primarily by global developments. Import export. In the month of June, merchandise exports amounted to $32.97 billion, while imports stood at $53.10 billion. Comparatively, in May, exports of goods were recorded at $34.98 billion and imports were at $57.10 billion. June saw service exports worth $27.12 billion and service imports worth $15.88 billion. In May, services exports were $25.30 billion and imports were $13.53 billion. For the April-June quarter, both services and merchandise exports experienced a year-on-year decline of 7.3% to $182.7 billion, while imports fell by 10.2% to $205.29 billion. This decline in international trade can largely be attributed to the ongoing global economic slowdown. Employment. In a surprising turn of events, employment in India witnessed a decline of nearly 3 million in July 2023. This departure from the usual trend was unexpected since historical data indicated a usual rise in employment during this month. Since 2019, typically around 10 million jobs were added in July, primarily in the agricultural sector due to the Kharif crop sowings. Additionally, the labor force tends to expand during this period, possibly in anticipation of increased demand for labor in agriculture. Despite this, July 2023 proved to be an exception to the norm. The total number of people in the working age group, either employed or actively seeking employment, amounted to 440.3 million in July. This figure represents the size of India's labor force, which experienced a contraction of 5.7 million compared to the previous month. The decrease was a combination of a 3 million drop in employment and a 2.7 million decline in the number of unemployed individuals. Consequently, the labor participation rate also slightly decreased from 39.9% in June to 39.3% in July. While the country's unemployment rate appeared to decrease from 8.45% in June 2023 to 7.95% in July, this figure may be deceptive. The decline in unemployment occurred alongside a significant contraction in the labor force and workforce. This trend aligns with historical patterns observed for the month of July since 2019. High performance indicators. Data for the high frequency indicators for the month of July indicate that the economy has continued the strong momentum from the first quarter into the second quarter. Automobile manufacturers witnessed their all-time best shipments for the month of July, delivering 352,500 vehicles to dealerships, making a 3.1% increase compared to the previous year. In July, jet fuel sales experienced a 10.3% year-on-year growth due to increased airline travel as indicated by preliminary sales data acquired from state-run oil marketing companies. Electricity usage saw a rise reaching 139 billion units in July, a notable increase from the 128.4 billion units consumed during the same month the previous year. Meanwhile, the railway accomplished a freight loading of 123.98 million tons in July, reflecting a 2% growth from the 122.15 MT achieved a year ago. The count of UPI transactions hit 9.96 billion in July, displaying a remarkable 58% surge compared to the previous year. These transactions totaled around Rs 15.34 lakh crore, marking a 44% increase over the performance in July of the prior year. The Indian economy displays a blend of strengths and challenges. Sectors like GST revenue, FPI, and high-performance indicators indicate resilience and growth potential. However, inflation concerns persist, highlighted by rising retail and wholesale indices. Decline in forex reserves and international trade underscore global influences. The labor market's unusual dip in employment contrasts with historical trends. As the nation focuses on managing inflation, boosting investment, and diversifying trade, the economy's trajectory appears to balance optimism with vigilance required in dynamically evolving global landscape. Thank you for watching this video. Please like, share and subscribe to our channel for more such content. Also, do press the notification bell to stay updated.